Welcome to Techquity, our show on tech stocks. I'm Rob Searin, technology columnist for Reuters Breaking Views. Next, Google's deal helps Facebook, Samsung pushes further ahead of Apple, and Audience gets cheers from an analyst. First up, one of our four horsemen benefiting another. The Fed took on Google and lost, and that could be great news for Facebook. After spending years trying to claim the search giant was an abusive monopolist, the FTC was forced to let Google go with merely a slap on the wrist. It couldn't prove consumers were harmed. Now, this is bad news for rivals like Yelp, Yahoo, and Microsoft. Google now has its hands untied, and it can take them on aggressively. And this isn't going to help Facebook either over the short run. After all, Google's painted a big bullseye in the social network. But it is excellent news over the longer run for Facebook. The tech monopolies often arise because of what's called virtuous circles. For example, the more people that use a tech platform, the more useful it is for everyone else. Businesses, for example, gravitated to Microsoft because it was more convenient to use the same software other companies had bought. Now, similarly, Google's huge user base attracts advertisers, which gives Google cash to build up the best infrastructure, which attracts more users. And it's hard for the government to prove that consumers are harmed by tech companies that foster these virtuous circles. Facebook has set up its own virtuous circle. People simply want to be on the same social network as their friends. In fact, it's beginning to look suspiciously like a monopoly in the making, and that always attracts unwanted government attention. Now, the feds have taken on two giant tech monopolists, Microsoft and Google, and it's lost badly both times. Should never say never, but it seems unlikely the government will try a third time to claim the scalp of a tech giant by going after Facebook. Now on to the Apple-Samsung war, and score one for Samsung. Strategy Analytics predicting the Korean company will widen its smartphone lead over Apple this year. Samsung's market share seen growing to 33%, with shipments of smartphones rising to 291 million to 21% and 180 million for Apple. In the US, data from ComScore shows Samsung holding its lead over Apple in terms of mobile subs. The data comparing these 3 months ending November to the previous 3-month period. In terms of platforms in the US, Google's Android climbing to nearly 54% of the market, with Apple's iOS in second place. Shares of Apple down about 2% today to near 530. Apple's also apparently losing out in an effort to beef up its mapping service. The Next Web reporting it offered to buy Waze but was turned down. The community-based traffic and navigation app reportedly wanted nearly $1 billion, and other reports indicate Apple offered only about $500 million. Now, mapping traffic is hot right now because everyone is starting to use their smartphone as a GPS device, and this means you can collect lots of data from users. Waze rival Inrix may also go public in a couple of months, so Waze was probably smart to turn down Apple today and hope for more cash tomorrow. Soaring and sputtering time. Our look at other big movers. Soaring is Audience. The maker of chips for the iPhone upgraded to overweight from neutral by JP Morgan. Its shares are up 10%. And sputtering, Silicon Image. The maker of chips for computers, TVs, and video players, cutting its fourth quarter revenue forecast, setting a rescheduling of certain orders by a large customer. Stocks down 11%. That's Techquity this Friday. Remember, you can follow us on Twitter at RTRS Techquity. I'm Rob Searin, and this is Reuters.